Hi guys, we're going to look at GME once again. I'm going to go through some technical analysis, firstly on what we think the price is going to do next week, and then going to go through this article right here by Tom Majowski, and this is a pretty tell-all article and goes through a lot of interesting stuff. It's very long, we'll be going through it, but I'll be summing up the detail to you, and it's some excellent stuff in here. This guy has been really changing the way people think on LinkedIn of all places, where there seems to be a lot of apes interested in the price. But before we get into that, I'm just going to say thanks for watching. Please give a like on the video. It really helps me out in terms of getting my video to as many people as possible, and in return I'll keep on bringing you the best DD I find on the internet for GameStop and AMC. But today, as I said, we're going to focus on GameStop. Before we get anything else, you can see the price finished at 180 after the week, so still looking pretty good. Very bullish trend line here. Hasn't dipped below this amount, so we're going to keep on going, and hopefully that this is still a ascending triangle, even though it's a very small slope. But you can see it finished at 180. If we just zoom in a little bit here, you can see it's actually pretty bullish movement for the last few days. So if we go 5 days, it's been increasing very slowly, but hasn't really broke that 196 that we saw. But 180, if we bring it back, this means that we are pretty much back to where we were just pre that spike to 350. So if I continued at that, I'm sure we'd all be very happy with this spike and a little bit of downward movement, especially with the shorting of the ETFs. I think that this is still okay in the grand scheme of things. Also, I just want to draw attention to this MACD line here. So this has been pretty telling in the big movements. So this is a bullish signal when the signal line and the MACD line cross. And where has this happened before? Well, the initial squeeze, then it was, well, you can see from the green and the red, red, did it again, green, red, green, another price movement, and it looks like we're on the way back down again. So should be expecting some pretty bullish movement in the next few weeks, oh sorry, days and weeks. But anyway, let's get on to this article here by Tom Majewski, and this is named Citadel has been stealing from you and GameStop, and I'll be summing it up because there's a lot going on, but I'll try and go through it best I can. So I'm here stating that Ken Griffith's Citadel has been stealing you in what specifically? Price discovery. So just quickly before we go into anything else, what is price discovery? Well, that is the overall process of setting the spot price of a proper price of an asset, security, commodity or currency. The process of price discovery looks at a large number of tangible and intangible factors, including supply and demand, risk attitudes, overall economic and geopolitical environment. Simply put, it's where the buyer and seller agree on a price and where the transaction occurs. So it's the price of finding out the price of a given commodity or asset, and there's many different factors. So how are Citadel involved in this? Well, you can see here they've been stealing price discovery. Study in 2020 suggests that short sellers play an important role in price discovery, and short sellers trading activity that makes price more informationally efficient. In this study, test taken all these different approaches that suggest that short sellers trading contribute significantly to price discovery within equity markets. Short selling is associated with more efficient pricing in the sense that the prices appear closer to the efficient or fundamental value when short sellers are more active. In contrast, we find no evidence that hints at price stabilization or manipulative trading by short sellers till now. I submit that over the decade that this study there's abundance of evidence of price destabilizing and manipulative trading by short sellers. How can there be price discovery if it's 60 to 7% short with 50% going through the dark pools? In fact, 80% of traders do not affect the price at all. So this is a spreadsheet here, and this is by the US SEC, and odd lots have another effect that prejudice retail investors. Odd lots are transactions that do not update the high, low, and last price of the sale of the security. So I just said that again. Odd lot transactions do not update the high, low, and last sale price of the security. So what is odd lot? An odd lot is the order amount of a security less than normal unit of trading for a particular asset. Odd lots are considered to be anything less than 100 shares of a stock. Trading commissions for odd lots are generally higher on a percentage basis than those of standard lots, since most brokerage firms have fixed minimum commissions for undertaking such transactions. So that's what an odd lot is. And if we go back to this, you can see that 80 to 90% of game trades, GME trades, have no effect on the price. Interest from retail, because we deal with smaller lots than 100, has no effect. The rules of supply and demand are suspended because of these rules in place. And if we look at some other comparisons here, Apple, AMC, Tesla and GME, you can see that the odd lot rates have increased dramatically over the more recent time for GameStop and AMC, up there with almost Apple, which is quite a lot. 80-90% of odd lot trades show 80% of odd lot trades since January show a great deal of retail interest exists, and that's most definitely a buy, but they're also a sign of HFT, which is high frequency trading, so they're likely contributing to the high percentage as well. Tesla, this is not surprising. It's a meme stock, so not really lots of retail. Movie stock, AMC, hit lows of 30% in January, but just one data point. And then Apple, who knows, no one follows the stock. Fair enough. So what does this mean? Basically, the price should be a lot higher than it is, but because these are odd lots not taken into account, it doesn't matter. So if we go to this part here, that leaves 38%, which is most executed by off-exchange wholesalers. Just 7 wholesalers account for the vast majority of within this group. With off-exchange market maker space, we are seeing concentration. One firm has publicly stated they execute nearly half of all retail volume. So this is saying, can the dark pool be abused? Here is a lot of examples of different brokers abusing the dark pools from 2012 to 2018. And Citadel is paying order flow for 9 brokers: E-Trade, TD Amount Trade, Charles Schwab, Webull, Ali Invest, First Trade, Fidelity, TradeStation. Prove to me how Citadel is not stealing price discovery. I'll wait. Then he goes on to say basically that manipulation of the US stock market is basically standard. We can see that that does show you how easy we have to manipulate it sometimes, and well, I can't repeat that, but you can see here these are a lot of previous articles on things that have been spoofed. You know, JP Morgan pays $1 billion fine, Deutsche Bank, spoofing. So once again, massive Ponzi schemes and troubles there. And I'll just scroll down a little bit more and we'll get to some of these points, which are pretty telling as well. I mean, I would say read through this article. I've read it a couple of times and it's pretty detailed and there's a lot going on there. Here's one violation in a 4-year period involving 380 million short interest positions, and he repeats that 3 times due to just show how crazy it is. And if we just go down again, they've increased their position by 120%. Citadel is managing 380 million over 380 million in market securities in December, and this is split in between puts and calls. 20% is only actual shares. So once again, you can see that this is a lot of trading practices which are to do with options, not necessarily on the stocks. And if we go down again, you can keep on seeing that they have small fines, and then naked shorts fail to deliver. Short sellers on trading halts. This is starting to sound familiar. Yes, it is. The trading halts on GME, that was on March 10th, where the stock dropped unbelievably. Triggered at least 4 circuit breaker events. So the drop of the price was 40% in 5 minutes. 25 minutes, sorry, and that is crazy. The volume was exactly the same, but it was dropping down. So how the hell is that going down? Once again, they were fined $15,000 for their trouble. If you compare it to other companies that have done this and these flash crashes, Goldman Sachs, Morgan Stanley, Merrill Lynch, and they've been in the millions once again. So I would say go through this article again. It is a pretty crazy article. Definitely needs a couple of reads because it is very detailed. But I would say again, once again, that is Tom Majowski. Citadel has been stealing from you and GameStop, and it details everything I just went through there at a high level, but in a lot more detail. So definitely read through it. It's excellent stuff. Please leave a like on the video if you enjoyed it, and I'll be releasing more videos later. But thanks for watching, guys, and I'll catch you guys next time.